everyone. Welcome back to the podcast. Thank you very much for being here. All right. Today, well, first of all, let me start with this. If you guys are a client and you are listening to this and you are, I don't know, living under a rock, maybe you didn't hear, but we are having our client only conference in San Antonio in January. And so check your emails. You've gotten emails to register. You've gotten text messages to register. It is for clients only. You cannot bring a random friend along. I am sorry. Clients only. So if you are a client and you are thinking about coming, get registered before the cost goes up. And then, of course, we have limited seating because I didn't get an auditorium. So, anywho, go ahead, get registered. It is going to be a fantastic time. If you are not a client, then I'm sorry that you are not, if you're a client before January, you are welcome to come. But if you, and my schedule is filling up. So if you are not able to come, there will always be next year, hopefully. All right, let's get on with the podcast. I have had quite a few questions on this lately, so I figured I would just address it. And it is, shouldn't my premiums equal my income? First of all, the insurance company, and I've done podcasts on this before, but apparently I need to revisit it. Insurance companies will not even allow you to put your entire income in the policy. And I had somebody online the other day that said they're in this group. And they said, well, I put 200% of my income in the policy. So how are you doing that? Lying to the company? The company wants to make sure you can pay those premiums. If you can't pay the premium, they're not going to allow you to make this big, huge policy payment. Like they don't want the policies to lapse. So it's only going to be, and I don't know the exact dollar amount, is 25 to 35% of your income basically is what they will allow tops for premium payment. Every company is probably a little bit different. And so if you are putting more than that in and you're lying about your gross income, how is that going to serve a company if you can't pay the loan back and you can't pay the premium back? People took everything in Nelson's book so literal. Here is the part that they are not taking literal. It is, and I have this highlighted in my book. Guys, you can see my book is like well read. It will take the average person at least 20 to 25 years to build a banking system through life insurance to accommodate all his own needs for finance, auto, home, etc. But once such a system is established, it can be passed on to future generations, yada, yada. Okay. 20 to 25 years to build a system. Guess what? Everybody wants to do it overnight. They don't want to do it any faster than that. The people that will be able to do it faster than that have a lot of cash flow coming in. If you don't have a lot of cash flow coming in, that process is going to slow down. But 20 to 25 years to be able to finance everything through their system. That's interesting because I wouldn't have even thought it would be that quick. Because think about it, in 20 years from now, I'm probably still buying things. I am probably even doing more than I did the year before because I might have a bigger portfolio of businesses, rental properties, farm ground, whatever. As we grow every single year and we have more income, we tend to buy more things. And so as you're growing, you may end up going to the bank for stuff. It depends what you leverage it as. Now, I would assume that if we are just going to stay the same and we're just going to continue to buy our vehicles and our boats and our campers, and we're not going to be trying to grow a system and create cash flow, that's probably correct, 20 to 25 years. The majority of people that are listening to my podcast are not those people. And so you're just trying to rush everything, which then what? Could catch you with your pants down. Now, you're not going to hear a lot of other agents talk about this. In fact, most other agents think that I have lost my ever loving mind. But I am super conservative. I don't want people not paying their premiums. That's just ridiculous. And I have had stuff happen to clients, bankruptcies, life changes, divorces. Those sort of things are going to happen, and people are probably going to cancel their policy. But in all reality, it should be the last darn thing that you cancel. It should not be the first. People go to their savings and they're like, okay, and they cut bills. And that is a problem because it should be a matter of how can I continue to afford this, right? Do I have to work another job? Do I have to start a business? What do I have to do? And I'm sure some of you out there are saying, Mary Jo, you don't know anything and I liked you until that point. Okay, then. I've been in that position. I am divorced and was divorced. Not currently. I was divorced and I didn't sit back and go, oh my gosh, I don't have anything. I worked 2 jobs, had a little business on the side, was going to school full time. I didn't just sit back and say, oh gosh, this is going to be really hard. No, I cut back on the furniture I bought. I didn't have cable TV. But guess what I did not do? I did not deplete my savings. Instead, I continued to build my savings. I just cut all the other luxuries in life because frankly, I didn't need them. I didn't need to spend money on cable TV. Why? Did I have internet? You darn right I did because I was building websites at the time. You can do other things, but what people want to do is just go, oh, well, you know what? We're just going to cut expenses. We're going to cut that life insurance out. We're going to, cut out the whatever other things that are necessary, I think that are necessary. Life insurance is necessary. It is necessary. And yet you're cutting it out and saying, oh, I can't do that anymore. And maybe you can't do it to the full extent. That is why we have the minimum premium that's due. And it's not just the maximum amount that gets paid all the time. So something to think about. This is just a short podcast today because it's just really all about, do we have to do everything so quickly? Do we have to put so much money in that we get caught with our pants down? And be logical. The life insurance companies are not going to allow your premiums to equal your income. Not happening. You know how many times they ask me, where is this money coming from? How did you determine the death benefit? That's a very common question because they're looking at that based on your income. That is why when you have a stay-at-home mom, the premium has to differ because the income isn't there to pay it. All right, you guys, let me know if you have comments, questions, concerns. Mary Jo at withoutthebank.com. If you've not gotten the books yet, go to withoutthebank.com or farmingwithoutthebank.com and grab your books. All right, guys, have a fantastic rest of your day.